Well, howdy there, folks. We're talking a little Tesla in today's video, talking a little Ron Barron. Got some awesome clips to react to here. First, actually, little clip, 1 minute clip I want to react to before we get to the Tesla stuff is the University of Michigan Consumer Sentiment. They've been doing this survey since the 1950s. Those numbers came out here today. I want to listen and react to you guys, kind of give you my 2 cents in regards to that. Second video I want to react to, this is a big one. Watch what happens once Tesla starts selling $25,000 car. Billionaire investor Ron Barron. Obviously, a lot of people would consider him a super investor, very famous name in the market, has had some incredible returns over the years and some incredible stocks. He's a Tesla shareholder, been a Tesla shareholder for many years, and I want to hear what he has to say in regards to this. I've always enjoyed Ron Barron. I mean, he spoke about Tesla stock even before I was in it in like 2018, 2019. So looking forward to getting to that one. And then this one I thought would be an interesting one to react to. Billionaire investor Ron Barron, I've never owned a bond. Okay, so this should be an intriguing one, especially somebody that's been in the market as long as he has, never owned a bond. That's just going to be interesting. So appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed to the channel. Also, I am proud to announce our massive Black Friday sale is coming up. And yeah, this is the first time I announced it on this channel. We're doing an epic sale this year. It's for our $125 usually tier on Patreon. We're going to do it for $62. So $62, you get access to my #1 stock market course ever, my Become a Master Stock Market course, ability to see the stocks I'm buying and selling each week. I was actually making moves in there today. And then exactly how I diversify my funds around, build a portfolio. So if you want access to that on Black Friday, it's going to be a 1-day sale. Then check out the pinned comment of this video, enter your info, and we'll send you that over on Black Friday. I'm looking really forward to that, and I wanted to make it a deal that everybody could afford this year, so certainly everybody can afford that. Alrighty guys, let's get into this.
Data a couple moments ago. Let's get back to Rick Santelli. Good morning, Rick.
Good morning, Carl. These are our November preliminary reads on University of Michigan sentiment. Headline number expected to be a bit under 64.
By the way, if you're curious, like what's a good number for consumer sentiment, anything over 90 is considered good. When you're in the 60s, you're at horrible numbers, like, you know, down there where you're kind of in the worst area ever in the history of consumer sentiment, like somewhat in that range.
Oh, it's under 61. 60.4. That's the weakest since May of this year. And if we look at
folks, that's not good. Oh my gosh, I didn't know it came in that bad. Holy smokes. Now this has huge ramifications, okay? One is you don't want to see a 60.4 going into the holiday shopping season. That's not good. Second component is if I was the White House, if I was in office right now, I'd be pooping my pants, okay? I'm telling you, this is a disaster. The election's not that long away, okay? And you need the consumer to feel a whole lot better. They've got about 6 to 9 months here to fix this consumer sentiment. Because unless the consumer gets in a lot better place with how they're feeling, I'm telling you, it's going to be hard to win that election. If I was a White House, I would be scared looking at these sorts of numbers. This is not good.
Conditions at 65.7, also the weakest since May of this year. We're looking for a number north of 70. And if we look at expectations, what may lie ahead, we're looking for a number 61, 61 and a half, 56.9. And you guessed it, that is also the weakest level going back to May of this year. Now, let's get to 1-year inflation. Expected 4%, up 4.4%. So let's look at this. If you look at where we were in September, it was 3.2. Last month was 4.2. That means we went from a 6-month low to a 2.5-year high in 1 month. Now we're moving up to 4.4, which remains a comp going back to April, but it's awfully interesting. 2.5-year low, 6-month high, all in a couple-month period. And if we look at the 5 to 10-year rate, also kicking up from 3% to 3.2. Boy, 3.2, you have to go back all the way to May and June of 2008 to find a higher number than 3.2, which would be 3.4. But to be fair, we equaled 3.2 in March of 2011, and there's been several 3.2s. But these are hot on inflation, cool on growth, and we see that interest rates, well, they're all down on the session. But outside of 20 and 30 year, all maturities are up on the week. Carl, back to you.
Oh my gosh, what a freaking disaster. Before we get into Tesla and Ron Barron stuff, I'll pull you guys up a chart of the University of Michigan consumer sentiment going all the way back to the 1950s. So you guys can see how pathetic, honestly, these numbers are. This is a freaking disaster. Alrighty, guys, here it is. Here it is, right in front of you. So we just came in at about a 60, okay? I mean, look at the line of 60. I mean, that's pretty much right around the lowest we've ever been. Now, we did actually hit a all-time record low in 2022 right here. But this is an awful number. And like I said, if I was the White House, I would be frightened in regards to that number coming in right there. Now, we know, despite the consumer sentiment being awful for really like probably a year and a half now, we do know the consumer's still been out there spending, right? And so that's where we get into this interesting dynamic between the difference between people spending and maybe people feeling really bad. But the bottom line is, if people feel really bad, they're going to vote other people in office. And so that's where I would be worried if I was those folks. That's all I got to say about that. Damn. That's a bad number, okay? Not what you want to see going in the holiday shopping season. Alrighty, next up here, Ron Barron. Let's hear what he has to say about Tesla, and then we'll get into the bond one. This should be intriguing.
We always do, but then I want to sort of broaden it out and talk about the markets and some of the other companies that you're invested in. There was an analyst call just yesterday, this is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this and probably laughed given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to their own company and to others. They can't possibly be matched by anyone else. They have data.
You can call Tesla an automaker. You can call Tesla a tech company. You could call Tesla a freaking utility at this point. Literally. Think about the supercharger network. And now, like every car auto manufacturer out there is going to want to basically use Tesla's system. They're basically going to be a glorified utility company now. And you think about their solar. As they build out a solar business, I mean, the Tesla's a lot of things, and that's what people got to realize. It's a lot of things. No different than Amazon's a lot of things. It's also a huge services story in regards to Tesla, right? This is like an Amazon type story where you have many growth levers all over this company.
Technology, they make cars cheaper than it was when Ford makes one of these cars, an electric car. Every car they make, they lose $36,000 on. $36,000 per car.
Ugh.
Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant that costs $7 billion for 1 million cars, that plant was making $15 million a year, $15 billion a year on a $7 billion investment. $15 billion on a $7 billion investment. An ordinary industrial company would make 15% on capital, 20% the most. This guy's making his capital twice a year. Now
okay. That's a way of putting it. That's why I love hearing somebody like a Ron Barron. He just put that so much differently than I've heard anybody really talk about it in terms of the investment versus what they get out of that investment. I love that part.
He's making it once a year.
You might want to rewind that and watch that again. It's not something you're going to usually hear many Tesla shareholders or Tesla folks in general talk about. That was a great point he just made.
$1 billion in a $7 million plant. So he's the lowest cost person. Everything about the business is trying to drive prices lower. Right now, they will be in the 1900s, early 1900s, the automobile companies were tremendous innovators. No longer is the case. In the 1950s, they decided they were going to go for profitability, and they outsourced all of their supply chain to their detriment. And all these companies went bankrupt. Hundreds of them went bankrupt. And now the way we're going is that their electric cars, they drive, I guess they have about 30 miles a day, 30 or 40 miles a day, and they have...
Okay, so a point he just made there, you know what industry that reminds me of? What he just talked about? You know, the auto manufacturers were tremendous innovators up until basically the 1950s, and then after that, obviously, you know what industry that reminds me of a lot right now? Is the smartphone industry. I feel like we're about to go into a dark ages of the smartphone industry where everybody kind of has their market shares. And I don't think a lot of these guys, including Apple, are going to be that focused on innovation. You're going to get very similar product coming out year after year after year after year. Maybe this is slightly better than everything. That's the auto industry for the last 60 plus years. My first car ever was a 1977 Mercedes. It was this old car that got like 8 miles to the gallon. This old Mercedes had features in it like Windows at auto went up and down, except they were kind of broken, so because the car was so old, so I used to have to like try to pry it down. But it had features like that. It had auto locking doors, which didn't really work anymore, unfortunately, because the car was so damn old. But it had that feature. It had where you could set the speed, right? Cruise control, as you would call it, which was a feature that was, and by the way, that feature actually still worked when I had the car, thank goodness. Cruise control. There was a feature that, really got it popular in vehicles in the 90s and the 2000s. And I looked at that car and I was like, damn, man, like this is a 1977 I'm driving around, and it feels like not that much different than like what a car was in 2008, 2009, 2010 in terms of features. Just the styling's a lot different, right? And that was auto sector. And that's why Tesla's come in and just knocked the doors off, because they came in and innovated on several different things at the same time, which completely changed the game in regards to auto manufacturers, right? And now everybody's trying to change the game and trying to copy Tesla. But damn, that's a hard proposition to try to copy, right?
3 million of them that are collecting data. 100 million miles a day they're getting for data, and then they're also getting compute.
And by the way, EVs will eventually go through a dark spell, probably after 2030. After 2030, you'll start to see innovation in EVs slow down in a substantial way. They're in a tremendous movement of innovation right now on the battery technology side, on the interiors, on the computers that run these cars, right? On the self-driving side. We're in an incredible time period of innovation, no different than the smartphone industry was in its first, 10 years. Like you look at 2007 through about 2017, how much innovation happened in that we can call it 10-year span. And the smartphone industry was absolutely amazing. And we're watching that. We're in that time period right now for the EV industry. But we'll eventually go through a dark time where there's not going to be much innovation anymore.
We're going to have
it's
more
years away,
than
though.
anyone in the world in 18 months.
So
to train it.
Have you been surprised, and this is true of the other EV makers, a lot of EV makers have put up big goals in terms of sales, and then they've scaled those goals back, saying there's just not the customer demand. Do you think that is the responsibility or a function of the products that these other automakers are putting out? Or do you think that there actually isn't the demand for EVs writ large?
I go back I go right back to the smartphone industry. Guess what? In 2009, every freaking buddy wanted to sell a smartphone. Every damn company out there, 2009, 2010, 2011, they all tried it. And many of them didn't have the demand. You know who did have the demand? Apple had the demand. Samsung had the demand. And outside of that, all these guys tried it. Amazon freaking tried it. Did everybody forget Amazon launched a phone and then they found, damn, we don't have any demand for this thing? Just because you launch a product doesn't mean you're going to have demand for that product, even if that's the hot thing. And so what a lot of these other EV makers are finding out is, oh, damn, people don't want to buy our freaking cars. You know why? Because they don't trust our cars. Why would I want to go out? Why would I go out and buy a Ford EV, a GM EV, a Volkswagen EV, whoever, over a Tesla? It makes no sense. Like, this is what Tesla does. It's no different than if Tesla decided we're going to go make an internal combustion engine, and then I go buy a Tesla internal. No, I'm going to stick with the companies that do that have been doing that for decades, that have that technology down, right? If we want to call it technology, that have that product down, right? I would go with them. Like, you're not going to go and get, like, that's just crazy. Like, you're going to go buy an inferior product? You buy any EV in the world outside of a Tesla, you are buying an inferior product. And if you're going to buy an inferior product, you have to buy it at a price point that was significantly under whatever the premium product is, right? And so in China, people can undercut Tesla. In America, in Europe, that can't happen. And so that's why Tesla's winning in America and winning in Europe, and why they're struggling a little bit more, because they realize, damn, these guys can undercut us with 20K vehicles in China.
Paid or expected?
There's 1.5 billion cars that have to get replaced. They do about 80 million cars a year, and a small percentage of those, 10%, are electric right now. Ultimately, it's going to be all electric. But the reason there's not more demand is the cars that are out there are not very attractive by the dealers, by the car companies.
Exactly.
And they're expensive, number two. Exactly. And then in addition to that, the dealers who sell them, they don't want to sell them because there's nothing to service.
Exactly.
The dealers make all their money on servicing. So dealers sell them, they're not selling them.
Talked about trying to bring prices down, and that's something that Elon...
Exactly. 100%. Okay? The dealerships don't want to sell EVs. That's something I've been talking about for years. Kathy Wood was talking about that way back in the day. Ron Barron's been talking about that way back in the day. The dealers don't want to sell EVs. what are you going to service? There's not much. Of course, some things are going to go wrong here and there with EVs, but it's just not nearly as much in regards to maintenance or things going wrong versus an internal combustion engine. And so the dealerships, they make so much freaking money off service. Plus, they love you coming in because then maybe you're going to look around the lot. Maybe you're going to want to buy something. Maybe you're going to look for a new vehicle for your kids or, your wife or whatever, right? They love that model. They don't want to sell an EV. Also, do you know how commissions work in regards to dealership model? I'll explain to you how, okay? If you're a salesman at most car dealerships, guess what? You don't make crap off of selling a new vehicle in general. If you're a salesman, you're very incentivized to ultimately sell a used vehicle versus a new vehicle in general. And so you have all these new EVs hitting the market. As a salesman, you might make $100 off that, $150. You don't make crap. Versus selling a used car, you can make a lot of money. Okay, if you're a salesman at a dealership, you usually make your money from selling used vehicles because you get a way bigger commission on that, or from basically trade-ins and kind of that gap between what the dealership's willing to offer versus what that customer ends up getting. You can make like 25% on that gap there. And so it's very important to understand, like the dealerships, they don't want to sell EVs. The salesmen, they don't want to sell these new EVs. No one wants to sell it. And the customers don't really want them to begin with. So that's a hard sell to begin with, right? That's difficult.
He's talked a lot about. At the same time that he's going to try to bring prices down, you have the potential for Tesla to become a target of the UAW, which of course just made this new deal with the other big automakers at meaningfully higher prices in terms of what those employees are going to be getting. What do you think about that?
I think Tesla's employees are the highest paid workers in the world as far as the automobile companies go, because they own stock.
As a function of the stock.
And that stock option would not be present in all instances if it were a unionized company. When the unions were in control of Fremont, as soon as they had trouble, they ran from it. Tesla took over that plant in Fremont after the unions had left, after the company had gone bankrupt.
The amount of people that I know that became millionaires working at Tesla over the last 5-7 years is a long list. I know so many freaking people that became millionaires and multimillionaires because they got a bunch of stock. And all those people were never happy. I asked them, how do you feel about your pay? Just your base pay. And none of them were ever happy about that. Like, I feel like I'm underpaid, whether it was people that I know that work in logistics or, in the factories or engineers or whatever. They all felt they were underpaid in terms of base salary, but they all got stupid rich off the stock. And so that's an interesting thing in regards to Tesla that not a lot of people consider.
There's a good story that one of the executives and then I want to talk about it.
Yeah, no, of course.
One of the executives who devised the pay plan for the employees was telling me that he's a small Jewish guy like me, and he was walking through a plant, and a large black man walks over to him, shaved head, tattoos all over the place, and says, Ira, are you the man who devised the pay plan for us? And he said, yes. He said, I want you to know that I'm the first man in my family, the first person in my family to ever be able to afford a home. And thank you very much. And so the workers there make more than anyone else by far, and their health care, all the benefits are better. The unions have been trying to organize Tesla, Toyota, all the foreign companies for years. They failed repeatedly. Why? Because those companies the union's not in business to keep the employees. Their unions have the power.
Before we move off Tesla, just for
by the way, the stock went down yesterday, not because of that report.
What do you think it is?
Because of Joe Biden, President Biden, who, by the way, I love what he's doing for Israel, but I don't like that much what he's doing in business. Some things I like. But he's the one who said unions should organize Tesla. That's what happened yesterday when the stock went down.
Okay, we'll come back to the Biden piece in just a second. Melissa Lee, I think, has a quick Tesla question because I know I want to talk to you about a whole bunch of other things. Melissa?
Yeah, Ron, thanks for taking my question. When you think about China, how do you think about the growth?
What the heck? Melissa Lee's just chilling around? That's a fast money lady. She just hangs around the CNBC facility all day. Just got to pop out. Hey, Ron Barron, I want to ask you this. I'm looking forward to this.
Because that's a key piece to the Tesla story. Li Auto reported its earnings yesterday and had strong EV guidance. It's gaining market share. I'm just wondering how you think about the competition, but also the weakening Chinese consumer. And have you discounted that portion of the Tesla story at all, given the Chinese economic forecasts out there?
Ooh, good question.
Tesla right now is doing about 1.8 million cars a year. When we started investing in the company 7 years ago, when we invested between 2014 and 2016, they were doing 41,000 cars a year. So 41,000 cars a year to 1.8 million. They're on their way to 20 million cars. China is about 1 million right now of their 2.8 million. But a large percentage of what they make in China is exported from China to Europe. And the more they build in Europe, of course, the more they're going to save on transportation costs and duties. The idea is that China invited Musk in, and invited him in because the Chinese car companies have done very poorly for a long time. And the promise was that he's going to help them become better car manufacturers, and he's not trying to take over the market in China, better car manufacturers and develop a local supply chain. And so he's the only one that's ever been invited into China that's been able to not have a partner, a local partner, to operate their business. So I'm convinced that they have good operations in China. The person who runs their Chinese business, the Tesla business in Austin, in fact, is probably in line to be an important person at Tesla overall. He's Chinese, and he was brought from China to Texas and runs the business there. He's going to be in charge of all the automobile business. So I think the relations they have with China are exceptionally good. Both people are getting something from it. And I think that business will continue to grow. But he's going to open plants all around the world for low-cost cars. And wait till you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece, for $25,000 a piece, which is going to happen in about a year and a half. From their new model, the new model.
Big prediction. He says within a year and a half. Whoa.
They think is going to do 5 million cars a year. 5 million cars a year for the Model 2. That's coming.
Okay. Before we get to his Bond 3-minute video here to react to, there's two things I got to speak on. The $25,000 car in China. Let me talk about China first. China, really tough spot. It's super competitive in China, in the EV space specifically. That's where they have no competition. In the United States, they have no freaking competition in Europe. It's a joke. China's very serious competition, and a lot of guys trying to undercut Tesla left and right, and they're doing a pretty dang good job. And so China is extremely competitive for Tesla. With that being said, the Chinese consumer maybe, let's call it not in their best place right now, that will all pass. I'm very bullish on China over the next 5-10 years. I'm more bullish on India than China in terms of growth rate over this next 5 to 10 years, but don't count out China. They will get back on track. They were basically shut down in a pretty substantial way for about 3 years. And so they have a long runway of growth ahead. Don't discount China. Second thing is $25,000 car coming in the next year to year and a half, Ron Barron says. What do I think of that? I think no. I think no. I do believe in the next 5 years. I believe in that. Yes. In the next 5 years, $25,000 Tesla. Yes. In the next 12 to 18 months, is Tesla going to be selling a $25,000 vehicle? The answer is no. Flat out no. Like, no belief in that, okay? That would basically put them at this time next year selling $25,000 cars. Not happening. They're going to have their hands full with Cybertruck for the next 2 to 3 years of a ramp. People got to understand this is a 2 to 3 year ramp that's about to happen with the Cybertruck, okay? This is not like, we're ramped tomorrow. No, this is a 2 to 3 year ramp. Elon Musk has basically kind of forecast this. It's a whole different ballgame, whole different vehicle, and they're going to have demand for days in regards to Cybertruck for the next several years. Everybody on social media talking about it. Obviously, if we could drop down interest rates a little bit, that would help sell more Model 3s and Model Ys. And so, and the EV adoption is just going to continue to get bigger and bigger. Like, people forget, when people go to buy their next cars, more and more people are going to be thinking EV. And if you think EV, it comes back to Tesla at the end of the day, okay? So, $25,000 car is coming. My opinion is coming in the next 5 years. Ron Barron's opinion, it comes in the next 12 to 18 months. They're selling it. I don't think that's happening at all, okay? Just to be quite honest, okay? All right, guys, next one up here. Ron Barron, I've never owned a bond. Ooh, this should be interesting.
Investing more broadly, I don't know if there's other companies you want to touch on right now, but I just want to know, in this particular moment, given where you may think the market is, given where bond prices are, I think a lot of people are really trying to rethink what's the mix of what a portfolio is even supposed to look like in this world, given what's happening in Israel, in Ukraine and the like. Are you buying stuff? What are you doing?
Every day. I am amazingly bullish. And so basically in 1960s, there was Vietnam War, there was inflation, there were assassinations of
Thank
the
you.
President of the United States, President of the United States.
Preach.
There
Preach.
was assassination of Robert Kennedy, assassination of Martin Luther King.
Thank you.
I was a patent office examiner in Arlington, Virginia.
Thank you. I've had it up to here. I freaking have had it up to here with people complaining, oh, the world's so crazy. I'm like, dude, fucking open up a history book. The shit we're going through right now is nothing. Nothing compared to the we went through in the past. Did people forget 50 to 80 million people died in World War II? Did people forget we lost a huge percentage of the overall United States population in the Civil War? Like, people don't even have... Oh my gosh, the people that are so delusional out there. They're like, oh, the world's so crazy. I'm like, dude, open up a fucking history book for a moment. You realize that shit we're going through is nothing like what we've had to go through in the past, man. Our ancestors, our grandparents, our great-grandparents laugh at us, calling us softies. Y'all are soft. Like, you don't even realize the shit that people been through. Like, damn, man. Like, thank you, freaking Ron Barron. Thank you. And
I went to law school at night and worked in patent office at daytime. And one day, right after King is assassinated, one of my friends, I'm on one side of the office, runs over and said, Ronnie, come over here. And I ran to the other side of the building. All of Washington was on fire. Amazing. So we got our motorcycles and drove in. You're not allowed to. We broke into the city, driving around and came back. But that was the city falling apart. It looked like
that's awesome. Ron Barron on his motorcycle. Damn. That's back in the day.
Was ending. There would be marches on Washington. And the market, the Dow Jones was 1,000. The GDP was 800. 800 billion. It's now 27 trillion. The Dow Jones was 1,000 then. It's 34,000 now. It's 5 doubles. 5 doubles in the last 50 years, 53 years. That means you double every 5 years, every 10 years, rather. So that means that's when we're around 7, right? So basically, the way I think about it is that inflation, whenever you have a war, you have a pandemic, you have to have inflation. You have to have, the government has to pay for it. And when the government pays for it, then when you come out of it, they have to pay it back. The way they pay it back is not by paying down any debt. They pay it back by making your money worth less. So there's inflation. So the way we think about things is that inflation is going to reduce the value of your money in half about every 14 or 15 years. About 4 or 5% a year is inflation. That's my whole lifetime. 4 or 5%. Sometimes it's 2, sometimes it's 7, but 4 or 5% is the number.
So you would never buy a 2-year bond or a 5-year bond or
Ever.
a 10-year bond?
I've never owned a bond.
Wow.
Ever. Not one.
Big statement.
So I'm invested.
We're just all like Ron Barron.
A lot of cash either. I'm always invested, and whenever I have
Smart
a chance
man.
to buy more, I buy more.
Smart
so
man.
in Tesla, I gave you the sheet before.
Yep.
That showed that when I started in business, so 1970 I come to New York and I'm in debt. 1982 start Barron Capital. We had 10 million under management. 10 million. That's an M. Then 1992 had 100 million. Now it's 41 billion, and we have 40 billion of profits. So basically, most of the money that we manage is profits. Of course, we had 55 billion a couple of years ago, but that's all from depreciation. Now, I think what's going to happen in the next 2 years, by December of 25, I think we'll be back to where we were in...
And what gives you that confidence?
The businesses are growing, and the multiples are now lower. So basically, multiples are now lower, the businesses are growing. You know, the growth in our country is about 7% a year historically. It's about 4 or 5% of inflation, and about 2% is real. All the growth that we've had in the United States, in our country, has been in the last 200 years, and it's the last 20, 30, 40 years, it's accelerating. Growth is accelerating, it's not slowing down. And so basically, it used to be a capital-intensive economy. Capital represented, I think it was 65% of book values. Now it's 44% or 42%. It's becoming less capital intense. Multiples should be higher because of that.
Yeah, so just perfectly well said. And that's why I love some of these old timers like Ron Barron and Warren Buffett, and I hope they stay alive forever, man, because they'll tell you about just the crazy stuff they've seen in their lifetimes, right? Well, the bottom line is we are living in the most peaceful world we've ever lived in. Ever. This is the most peaceful, so I hope everybody understands that. This is the most peaceful world we've ever been in. Go back to any previous time period, any previous generations. Their world was more dangerous. Much more dangerous than the world nowadays, okay? Bottom line, you can't even get big countries to fight other big countries nowadays. Why can't you do that? We know why. We know why. And so Anyways, man, I just freaking love Ron Barron. I love Ron Barron. I love Warren Buffett. I hope those guys stay around forever because everybody always freaking out. And then they just bring you back to reality and kind of tell you how it really is and tell you the real stuff that's happened over time. And guess what? What did it all mean? Market higher, stocks higher, wealth higher, GDP higher. It's all it ever meant. So all the doomsday folks, are always wrong. And if they're not wrong, then it doesn't matter anyways. We'll all be dead. I appreciate y'all. Much love as always. Thanks so much for being here. Thank you for being subscribed, folks. If you want that massive deal we got coming up, Black Friday for $62, then check that out. That will be pinned comment down there, and we'll send it over to you for that one-day sale on Black Friday. Much love and have a great day.